Welcome back everybody to my channel. So on today's session, I'm going to talk about my EURUSD trade that I took today. I took two positions on this, expecting to take advantage of a nice swing in the market. So I wanted to make sure that I can have a position that I close out at my normal 1-to-3 risk reward ratio, and then a position that I can hold for a longer period of time. So how do I do this? Well, I usually risk about 2% per trade. And when I'm taking positions on the higher time frames, if I'm planning to swing them, especially now that the summer's coming, I'm going to be taking trades that I don't have to manage too much or be at my charts too much. So what I simply do is I split my 2% down into 2 times 1% risk trades. And then what I would do is I'll close out one of my trades at 1-to-3 or thereabouts. And then I'll let the other one run based on structure-based stop loss strategy. And if you haven't seen my video on that, check the last one that I posted yesterday and you'll be able to understand how that works. So my trade on EURUSD should be fairly simple to identify. Now, we all understand that in an uptrend, the market pushes up, exhausts, pushes up, exhausts. We make higher highs, higher lows. That's a simple structure of an uptrend. Now, I don't personally use trend lines, but what I do is I use a line to determine which way the market is going. So there's 3 phases to any market structure. You have up, you have down, and you have sideways. And for this reason, what I'm going to be doing here is illustrating that the market of this structure was pushing to the upside. Now, I'm not trying to join the dots here. I'm not trying to make sure that I can connect these to any structural level lows, any wicks, or anything else. I'm just simply looking for how the market is trading above this line. To me, it's like a brick wall. Now, once I start to identify that price for the first time in how long has decided to break close below this structure, to me that's a strong indication of bearish pressure and a potential reversal in the market. And if you don't believe me, then go to your charts and check it yourself, especially on the 4H time frame. When you go lower, we have more intraday trend lines, and when you go even lower, you have more intraday trend lines. But for this example, 4H is my structural time frame. I'm going to show you what I'm seeing. So here the trend line was to the upside. I can clearly see that price was trading above this level. On many occasions we can see that price attempted to break it, failed. Well, maybe not many, but on an occasion it attempted to break it and failed and continued up. We have higher highs, higher lows, higher highs. Now, with this structure of the market, we finally had a break close below this level, and it wasn't just a small break close below, it was a very strong break close below this structure. For about 12 hours, price was moving sideways, which we can identify as a range. And immediately, once price broke this range, it didn't just break the structural low and respect this trend line as we have drawn in, it broke and closed below. So to me, that is the first sign of a reversal in the market. So I'll continue to draw this. Now what I started to identify, start looking closer into price action, we can see that the market was in a strong push phase. Now, as we identified, after a push phase, you have an exhaustion phase. And for this reason, we may not ever know that this right here is the exhaustion phase, but what I can identify is that price is stalling at this level for a very long period of time. This is a strong indicator to me that this potentially will be the lower high to continue what is a downtrend and then eventually make the new lower low. So with that in mind, what I did is I went over to my entry time frame. Now, as I said, I'm looking to take longer duration trades now that the summer's coming, so I don't want to be sitting at my charts for a long period of time. So I used the hourly. Now, when we go down to the hourly time frame, what we can identify on this chart is the trend has changed, right? We can see that on the 4H time frame, this is just a slight movement, but what can you see on the hourly? This is actually an intraday trend line. So for me, this is my second confluence that I'm looking for, which means that if the market is pushing to the downside, I am clearly looking for sells. Now, granted, price does look like it's broken here, but what I want to show you, just so that you make sure that we identify this not as a trend line as being broken, but as an area in the market, what we can see here is price action is stalling in and around this area. So how do I identify this structure? Well, clearly I see this as a push phase, a level created, and price failing to break above the structure. I'm still keeping in mind on my higher time frame analysis, the 4H time frame, that the trend line has been broken to the upside, and now we're potentially creating a lower high for a continuation to the downside. So with that all in mind, what I'm looking for here is for evidence for me to be able to enter this trade. I'm just going to zoom in here and I'm going to start understanding the behavior. We have a push phase market. The market now starts to exhaust. Now with this exhaustion, we had strong bullish pressure to the upside. on the second hourly open, once we came into this key level here, we can see price attempted to push up and failed. Now this is not just a minute candle or a 5-minute candle. This is strong evidence of behavior. Bulls are trying to push this market up and failing. Again, they tried, they failed. And now what do we see in the market? We see that this level has become strong. This now is potentially determining to us that there's sellers in and around this area, and that the trend on the 4H time frame has been broken, and we may now be entering a true reversal. So how am I looking to enter this trade? Well, I can't just enter my trade like this because my stop loss range is going to be too big. I can't enter my trade down here because then my stop loss increases, so I can't use a sell stop. So what's my third and final option on this? Well, what I'm going to be doing is just patiently waiting to make sure that I have enough range to be able to take advantage of a strong move on the 4H time frame, which is a push phase. So what I did is I set a sell limit. Now, how do I determine where I'm going to place my sell limit? The truth is there's no right or wrong answer. You're never going to know where to place your sell limit. But what I can identify is in and around this area here, price is creating a level with multiple wick rejections. So I want to make sure that I can get in up and around this level where price is reacting to, and most importantly, I want to make sure my stop loss is above the previous structure high. So for that reason, let me grab my entry. So I entered this market at 09121, almost bang on there. There you go. And I use a 10 pip stop loss and a 30 pip target. 1 to 3. So as you can see here, my entry was in and around the same area that I joined the wicks together. Now it doesn't need to be perfect, but obviously what I want to make sure is that I give myself the highest probable chance of being filled. Now what happens in this situation? Well, what I'm simply waiting for is for price just to pull back around my sell limit area and trigger me in. My stop loss is way out there in space. Now it's only a 10 pip stop loss, and I have a reasonable target to meet the range of a push phase on the 4H time frame. So for me, this is a perfect trade. Now what am I waiting for? Well, price to simply pull back. And as you can see here, eventually price did pull back and it triggered me in almost on the dot. Now there are ways of taking these trades and making sure that you can get really sniper entries by having stop losses that look like this, which increases your range and your profitability. But I'm not in this right now to be doing that. What I'm talking about is a trade that I'm taking so I can be most relaxed in my position. So as you can see, price pulled back, got triggered into the trade in and around where I had the red line drawn, and price reacted and immediately dropped to the downside. So what are my plans with this trade? Well, I want to be able to manage this trade as soon as possible. I'm not going to go to break even immediately on this trade. What I want to see price doing, just in case we don't break below these levels here, if price needs to breathe, then I want it to breathe and go down. I'm trusting that the level that I have drawn in is the lower high, and price won't break above it because of past history. So I'm just going to give it breathing space. The minute price decides to break below this structure, then that's when I'm going to lock this trade in at break even. Now what I did, once price started to push in my direction, I decided to close out my first position on this pair at 08931. 08931. So in and around here, let's pop in our stop loss again. Let's see where we got. So almost a 1 to 2 risk reward ratio on this trade. And obviously I never knew this was going to happen. Well, that's not obvious, but I never knew that this was going to happen. I was fairly confident that that 4H candle would continue pushing to the downside and will be good to go in our second position. So I locked this in at break even anyway, while price was way down there at the bottom, and I trailed my stop loss into slight profits. So what am I expecting? Well, I only need the market to close strong bearish to then indicate that we can continue this movement to the downside and create this lower low structure that we expected to happen on the 4H time frame. But unfortunately, what happened? Price decided to do this. It went against me, took me out break even, and then as you can see here, it tanked to the downside, which happens. You know, not every trade that you take is going to be the greatest trade in the world. That's why we try to preserve our capital, and that's why I always say risk before reward. But as you can see anyway, we managed to close out a 1 to 2 on our first position, and then on our second position we got stopped out break even. But just imagine now that this didn't go up and the momentum continued to shift on the 4H time frame and we got into this position. Look at the difference in what our reward would have been from our first position, which was 1 to 2. And this is how you take advantage of really big moves in the market. But I just want to make this very clear. Some of you may say to yourselves, well, why did you close your stop loss? Why didn't you leave it open? You'll still be in this position. Well, the truth is, listen to this. If the market decided to respond the way it did and continue to push up, then guess what would have happened if I did lock it in at break even? I would have been stopped out. I'm not in the markets to just see if the market is going to go in my direction. I want to be sure that the market's going to go in my direction. So when it does start to go in my direction, which is to the downside, there's no reason for me to leave my stop loss open and expose myself to potentially being stopped out. Anyway, the moral of the story is we identified the break of the trend line here. This was a trade that I've taken. See a nice strong push phase, exhaustion phase, a level in the market where price reacted to and created a lower high. This is what I was trying to take advantage of, which I got my first position out at 1 to 2. Unfortunately, second position was closed at break even, but there you go. The market goes down. I really hope this was helpful for you just to see the thought process behind a trade and how you can manage your trades likewise. So as I always say, if you enjoyed this video, please smash that like button. Please drop a comment and let me know what you want to see next, because if I don't know, then I'm not going to be able to create content. So for me, it's very helpful if you can let me know down below. As I say, smash that like button, subscribe guys, and until next time, take care.